Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that just bright, kind of neon, just electric, nuclear radioactive green going across the entire board, as we've essentially heard that Jerome Powell isn't going to be as aggressive as he has been in the past at the Federal Reserve in terms of increasing interest rates. And what that means is that the Federal Reserve's thumb may have just been taken off of the scales there in terms of tipping the balance of the market. So now what the narrative is going to be, what we're going to have to find out is what can the market actually support by itself, guys, okay? So we're not out of the woods yet. I know everybody wants to celebrate, there's lots of confusion because the crypto communities just finally learned even what the Federal Reserve even is and what it does in the last couple months. Like every influencer in crypto Twitter, on crypto YouTube, finally started to talk about what we here at Alpha Commission have been talking about for almost a year and a half now, at least greater than a year, where we have been just going step by step at every increment along the way down in this bear market. Whereas, other channels, they just had no clue about what's going on with the macro. Now everyone is saying macro this, macro that, macro this, way, way, way too late. They have no idea what's going on. They're way behind the narrative. They don't understand why things are pivoting. We're in a disbelief rally. You can look at the green on the board. We're in a disbelief rally, and some people don't even want to believe that things have changed. They want to believe that we're still just crashing down, right? But of course, we have to switch gears. We have to continuously learn. That's what this channel is about. That's the whole mission of Alpha Commission, is continuous learning. This is not a calls channel. I am not trying to hold your hand and make trades for you the way that some of these guys are. I'm not trying to shove S coins down your throat the way that some of these channels are trying to. They have these headline banners of 100x and whatnot. I mean, we may find occasionally a gem, but it's extremely rare. Guys, what I do is I set levels for you, thresholds, right? We have a concept, and then we validate that concept, and then we get a confirmation. Did we get above that level or did we not get above that level? And we also go over the macro and the politics in order to understand the context of what's going on. And that's how we nailed the top of the market. That's how we nailed the bottom of the market. And that's how we've been able to just get this entire pump the entire way off of that kind of a double bottom, technical double bottom that we had on the crypto market. Let's go over what we saw yesterday, because I understand that it caught a lot of people off guard. On Wednesday, we basically had an employment report which did suggest, 106,000 jobs added. There was expected 190,000. It was pretty weak there, right, in terms of what we could see in the potential market here. And we did see the S&P manufacturing, PMI, it did shoot up a little bit hotter than expected there. We see the ISM manufacturing index just a little bit cooler. And the job openings, of course, it was higher than what was expected. So there's still demand in the market. The market is still a little bit overheated. The quits was basically in line with the last reading. And here's the headline news, guys, okay? Because all of that doesn't matter. It doesn't matter to the market, because what we saw was actually the nail in the coffin for the Federal Reserve in terms of their interest moving forward. We saw Jerome Powell start to not pivot, not go backwards, okay? Pivot is like a boomerang, right? A boomerang pivots in after you throw it and then it comes back to you. So we're not going backwards, simply most likely we're starting to see the beginning of a Fed pause. Maybe they'll do one or two more rate increases. But the indication that we got is that they're starting to thinking about pausing, and of course the market is going to build that into the price of the market, which is why we saw those kind of gigapumps, right? When Jerome Powell came out, he came out extremely weak compared to every other time that he's come out in the last year, and just being so weak and so flimsy and so kind of flippity floppity on what he's been saying for 1 year now. The market just doesn't believe that he has either the political power or that he doesn't have the will or intention to continue to fight inflation as aggressively as he has been in the past. And so the market got super excited because fighting inflation means, basically putting a lid on the economy. And when Jerome Powell's thumb is taken off of the scales, then the scales might tip in the other direction. Now, watch out because there may also be pullbacks, right? It's not like it's all perfect out there. Okay, we're still in a big S storm in terms of everything on the macro, everything in the economy. Things can still go wrong. We could get a double bottom in all of these markets. We could retest the lows. We could even make a slightly lower low or be in danger of something institutional breaking and then having a crisis, okay? But what I'm saying is that we're pivoting from the Fed narrative, okay? The Fed's not pivoting, but they're maybe just going on a kind of a pause. They're just doing the smallest thing that they can do, that 25 basis points interest rates, and then they're probably going to give up in a couple, more sessions of the Fed. And so we're pivoting from the inflation narrative, and now we're going to be talking about just the recession narrative. We're just going to be talking about these other crises that we have going on in the world. And guys, you guys at Alpha Commission should know I've been talking about this for a while, that the narrative was going to pivot in this new quarter, and that winter 2022 was the last time that we were really going to focus on the inflation narrative, and that in spring 2023 we were going to just be all about the recession narrative. And this is what these other channels don't understand. It's what these other influencers don't understand, that it's now about inflation, pardon me, not inflation, but about recession, and how deep does the recession go. Now, what are the key measures for recession? Well, we're going to be having to talk about the profit of these companies. Are they actually going to make profit, or are they not? It's going to be more about stocks fundamentals. Okay, you heard me correctly. Stocks fundamentals. It's not going to be about hopium. It's not going to be about, all of this kind of liquidity stuff. Yeah, we're going to have those conversations, but now we need to figure out how deep is this recession going to go. And so, why did the markets pump like they pumped yesterday in the technology sector, including crypto? It's because Meta beat their earnings expectation. I think they beat their earnings expectation something by like 7% or whatnot. That's just what I heard. I didn't look at it directly because I trust a lot of the people around me. But anyway, a couple of these companies are doing a little bit better than expected, and so we got that pump yesterday. But guys, this is different than the inflation narrative times of last year, okay? We can't just take a look at Jerome Powell and say, well, now we go up only, or now we go down only because the Fed is doing this or the Fed is doing that. No. No, now we switch to a narrative where it's actually going to be much, much harder than it was in the past, because now we have to say, well, what's Amazon's earnings? What's Meta's earnings? What's Google's earnings? What's Apple's earnings? And if Amazon comes out today and has bad earnings because we're in a recession and people aren't spending, then that could tank the market. Do you understand? So we're going to have to go day by day. We're going to have to go fundamental analysis. By fundamental analysis, and what do I mean by fundamental analysis? I mean that earnings, right? The P over E ratios for these companies. What's going on in the world? Are these companies actually functioning, or are they not? Do they deserve their valuations, or do they not? And if they don't, then if they're a large company like Amazon or Google or Apple or Meta, then they are going to drag the technology sector down, and that's going to drag crypto down as well. But additionally, we have the narrative of our international partners of the US, and who were trading against the dollar. And as the dollar finds its way, to turn down under the softer tone of the Federal Reserve, we have to see, does Europe get its legs back? Does Japan get its legs back? Are they able to take care of their economic zones, which are tied intimately with the U.S. Economic zones, which of course is pretty much everywhere? And how does this support? The greater buoyancy of this market, versus are we just going to completely come crashing back down at the end of spring, or at the end of summer, or in the fall? Are we just going to come crashing back down because, let's say that the Bank of Japan has a failure, right? They have a failure to make profit on these US assets as the number one buyer of US assets. Then are they going to be able to actually create a new regime which allows these financial systems to stand up? Or are they going to be able to repair the old ones? Or are we going to find ourselves in some type of panic where the contagion just spreads institution to institution because we've already broken something? Now, why would the Federal Reserve be changing their policies without having finished the job of fighting inflation? It would be because they think something might be about to break. Okay? The Federal Reserve, Jerome Powell, thinks that something might be about to break in the world. That's the only reason why the Federal Reserve would stop. That's the only reason why Jerome Powell, after a year of making it his mission to squash inflation, would be even thinking about a pause after all the harshness that he has put on this market. The harshest the Federal Reserve has ever been in the history of the Federal Reserve. But he has gone soft today. What did Jerome Powell see? What is the danger around the corner? And that's what we have to have that's why we have to have our eyes on the ball, right? In this baseball game, we can't just let that baseball just fly straight at our forehead and knock us over, because something is wrong, and that's why Jerome Powell is slowing down, okay? It's not because something is right. If things were right, then he would go as hard as he could go because he would have a lot more flexibility. But if Jerome Powell is slowing down, it's because he thinks something in the financial global institutions, okay? He thinks something in the global financial system is about to crack. I think it's the Bank of Japan. I think the Bank of Japan is endangering the entire financial system globally right now. This is the first time ever that it's unprofitable for them to be buying these American assets. That's why you see the dollar dumping additionally, because who's going to be the buyer of American assets? Japan was the number one buyer. China is number two. What happens if we have conflict with China and Japan can no longer be profitable on these things? Something is going to give. All of this system is leveraged, guys. Okay, it's not like it's just a 1-to-1 loss. It's like 2-to-1 loss. It's like 3-to-1 loss. And then the partners of these financial institutions can spin out of control. This is not over. It's not all just rainbows and sunshine. It's going to get a lot harder. That said, enjoy the green while you can, guys, because we are seeing an amazing pump in the crypto market. And the one thing that I tell you guys is always take your profit in a macro downtrend always be selling, put food on your table. You don't have to be loyal to these coins. They're not going to be loyal to you. Yes, it's going to look beautiful one day, and then the next day or the next week or the next month, it is going to look absolutely blood red, and you can count on that. So take your profits while you can. You don't have to get all out of the market. You can leave your moon bags. You can definitely be actively trading, managing those trades, but just to be very careful in this financial regime that we have going on right now in the world. Something spooked Jerome Powell at the Federal Reserve yesterday. He is scared of something, and we don't know what it is. They're not revealing their hand. But we are going to continue to enjoy this rally, and I'm going to get to the charts. But I just wanted to provide that context. There's a lot that these quote unquote influencers and gurus and all these like shills on Twitter and on YouTube and wherever, all these Discord groups, all this stuff. They're missing the big picture here. Something is around the corner, and we're going to sniff it out eventually, but they're just not showing their hand just yet. Okay, guys? But let's go to charts because, assuming that Amazon has a good day in its earnings reports, okay, assuming that some of these tech companies have good earnings reports, we are probably going to continue to pump green. If you start seeing the earnings reports come in from these companies and they are doing poorly, then watch out. We're probably going to have our major retrace, okay? But that being said, sorry for taking so long with that. Just wanted to make sure we're all on the same page, okay? We're not being doom boys, but we're not being, moon boys either. We're just going to be clever little alpha monkeys, okay? Not perma bears, not perma bulls. We're just going to put that profit in our pocket and preserve our capital in these weird and wonderful economic times that we have going on. Guys, if you look at the Bitcoin price, you can see that we are quite bullish on the 6 hour. I do want to do a little 6 hour analysis for our morning birds here, our early birds, because of course, many of you probably missed out on the rally yesterday, and so you would like to see, what our current setup is. And you know what? Before I do that, I think it's important to do a little truth in advertising, okay? Let's go ahead and go to the daily. And then let's turn off these EMAs here so we can just see what's been going on. I want to show you guys what my style of technical analysis is and whether or not we've been hitting these things. I do this every once in a while, but I just feel like it's necessary to just show you what we've been doing here. Okay, so let's go to the a couple of these previous setups that we had. This is not the current setup. This is the previous daily, guys. Okay. So previously, I was mentioning that we had this a huge, alpha momentum pool here. And what does that suggest? It suggested we weren't really going to skyrocket unless we got above 25,200. And look what's happening right now, okay? We didn't get above 25,200. Yes, the market was celebrating. Yes, yesterday was bullish, but we didn't get above 25,200. And so on the daily, like we didn't skyrocket off of this or anything. We didn't add any additional momentum. What did we do? We literally just came up to basically the trend line that we've been forming here, and now we're getting a rejection, okay? So even if the market went Super Saiyan in terms of its just excitement at the Federal Reserve kind of slowing down and maybe switching gears there, we don't actually see anything crazy happening. We're literally in the same range as yesterday. And look at the general continuation lines that I had for us on my last session of Alpha Commission. I had it at 20. What is this? 23,807. Look at our current price. We never actually closed a candle above that. Okay, we never closed a candle above 23,807. What we did capture is the volatility pivot of 23,459. So what does that system mean for, if you're a follower of Alpha Commission, what does that mean? Well, it means that we had that volatility pivot, so there was a good chance once we were above that that we could continue to push up to our just kind of our technical limit, which was this kind of diagonal that we have right here. And unless we closed above the general daily continuation, we weren't likely to just break out of that unless we got some additional or subtractive momentum. In this case, it would be additional because we're coming from the bottom and then we're flipping on top of it. That would be additional momentum. It's not like we were going to push across this support gap up here. It just suggested that we were going to fill out, these kind of measured moves, which of course we have a little bit of a, broadening wedge here. And so more or less what we did is just fulfill the measured move of that broadening wedge. And now you can see we're getting rejected from the top, okay? So nothing extraordinary happened. Okay, I understand it was very exciting to push up, to this resistance up here. You can see these are support and resistance kind of lines. You can see we filled up this whole area right here, right? We broke through this one, just kind of went straight through that. We kind of chopped around on this one, chopped around on this one. You can see this little support right here, this little wick right here came down to this line. These background colors, they do mean something, guys. Those are our support and resistance on the horizontals. And I just throw them out there because I'm primarily a diagonals trader, but I love those horizontals also just for showing us like where we're going. It's like the map, right, in the background. And guys, we can see that we did fill up that space, but we didn't break into the next one. So that's what we're going to be looking for. And the next chance to shoot across this kind of a big gulf in the background here with support and resistance is going to be if we conquer that 25,222. But again, just as a matter of review, we did not, get above the general daily continuation, and so we're basically just going sideways. We held our momentum. We gathered volatility, which is in our favor. Bias is up to the upside, but our general daily continuation is still just sideways. Now, when we talk about that, I think that we can probably most easily see that on the MACD. And if we take a look at the MACD here, you can see that it did turn bearish and it did soften yesterday, but you can see that it still has a little bit of a hard red color today. And so, am I just pulling your leg, guys? Am I just teasing you with these horizontal lines, that I mark out here on Alpha Commission, these key levels to watch? No, I'm not. If you want to turn the MACD bullish again, you do have to see us conquering these threshold levels that I put out for us. We do have to conquer these daily continuation levels. And so I'm putting that out there so that you guys can understand the key levels that we have to beat in order to basically, it's like defeating the next boss in order to continue to the next level in a video game. And so I just want to show you, look at where price action is. Okay, I'm not pulling your leg. Okay, look at where price action is sitting right on that line. Okay, so these lines mean something. Guys, let's take a look at the 2-day. Okay, let's go to the 2-day analysis. Again, we're just reviewing these past levels that I set out here. And for the 2-day, in order to hold our momentum, I suggested that we had to get above, we had to hold above this line. Look what happened when we held above that line. Boom. Boom, guys. We just completely skyrocketed across the channel here into the, into the basically the trend line up here. And we did conquer our volatility pivot. Which does suggest that bias is to the upside, but we were only able to do that because we held our momentum. Had we broken down from this line, then we would have likely just not been able to recover from this, and a bias would have been to the downside, and so we would have been in danger of losing our momentum. So again, guys, like these key levels, you can see like they are really important to hold these levels, okay? These volatility pivots, they're really important for our long-term direction. Now let's take a look at the 3-day. And just as a little bit of a review, same deal, right? We obviously had a lot more room on the 3 day where we could have broken down to and still been bullish in the long term. I mean, it would have taken a lot longer than the daily, right? It takes 3 times as long, but we would have had a lot more room to go. But look what we did. We held our current momentum. And so, again, like, look where the 3 day, we just switch to the 3 day here. Look where the 3 day launched off of. Boom, right off of that line that I had drawn there, okay? So again, guys, I'm not kidding around with this. Yes, we could have had a pullback all the way to this volatility, maybe reclaimed some of this naked kind of inefficient candle here, and then just pumped back up. But we held our current momentum, and that's why we're still very bullishly postured on these setups. All right, guys, I just want to do a little bit of truth in advertising because some of you guys might wonder, what is this system and is it legit? Are these lines legit? I just want to show you how these wicks tend to hit my line, okay? They're not like, it's not like a joke. Like these lines really do matter. So that being said, let's go to the 6 hour for you early birds, and maybe you can catch a play in the next 4 hours when the 6 hour does close. And what we're going to be looking for here is, is this thing going to short its way back all the way down to this kind of diagonal that we have going down here? Or is it going to essentially attempt to break out of this wedge to the upside where maybe, it's done something like this and then maybe it goes like this, right? So you can understand using the alpha momentum system where those key levels might be. And I'm going to try to explain this in a little bit more detail for those who may not understand it fully. The bulls are going to be in control as long as we're above 23,695. So what does that mean? That on a 6 hour basis, we look really good right now, okay, guys? We look really good. And let me turn on the EMAs also, just so we can see what that looks like for EMAs. Because I think I'm going to offer an EMA's tutorial class. If you guys want to join that one, if you guys are interested in that, I think I'll be offering that type of class so you guys can master EMAs. It's a lot more simple than using momentum, different types of momentum oscillators. I use 4 different types of momentum over 5 different time periods, and then calculate these lines for you. But I think you can use EMAs almost for the same purpose, and I'll teach you all the secrets of that in a future course. Not right now, but maybe, uh, well, maybe soon. But guys, please let me know if you're interested in that sort of thing, so that you can trade the same type of way that I do, the same type of way that the masters that taught me and that I learned from, also trade. Guys, yeah, so bulls are going to be in control above 23,695. There's no question about that. We're above the 4 EMA here. If we hold our current momentum, that's going to be at 23,829. Now you can see that we did actually look how important these lines are that I mark out. Look at where we wicked to, and then we basically got rejected off of it, right? Like we wicked above it, but look at the level that we're actually coming off of. That's the hold current 6 hour momentum. We have to recapture that, and then we could potentially do that push up because we are above the volatility pivot, which is all the way down here at 23,210. And what does that suggest? That suggests, just like we had kind of a wick up here, we could get a wick down here. That would be no problem. You see this wick, you see this wick over here, you see this wick over here. We could get a wick down there, but what we really want to do is close above that and then maybe go again, and then maybe this thing kind of takes off, right? Something like that would be really good for these type of 6 hour traders. Well, just for Bitcoin in general, because it could take a significant amount of time for that to happen. But if you wanted to launch right now, you would have to be above 23,829. You definitely don't want to lose the bullish control zone there. And we are going to lose momentum underneath 23,547. What does that mean? Okay, we're going to lose our general continuation. We're going to lose our additive momentum, and we're going to go into subtractive momentum underneath these key thresholds right here. And that just means essentially that we're going to lose this half of the chart. So if you can see, this is the top half, this is the bottom half. We're in the top half right now. We're basically going to fall down to the bottom half, and then we're just going to have to trade structure, and hopefully this support holds us up because we're going to be underneath volatility pivot. We're going to be underneath we're going to have a bearish MACD, right? We're going to be, underneath the bullish control zone in the RSI. And so all of this would suggest that we could have some type of a deeper pullback. Now, why could that happen? Again, like I was saying in the beginning of the episode, maybe Amazon has bad earnings. Maybe the bullishness that happened yesterday, maybe people want to take profit on it, right? And so we have to be aware that we're going back to fundamentals. We're going back to technical analysis. It's no longer about buying a bullish or bearish Federal Reserve. Okay, that narrative is over, and now we have to really do our job as traders, and we have to be much more careful about it. Okay, traders will win in this market, and people who are just ideological, or people who are just basically gamblers, they're not necessarily going to be as successful in the next half decade as people who are good at trading. Okay, so guys, anyway, that's your 6 hour chart for you early birds. Again, I wouldn't be necessarily gambling in the upward direction unless we continue to hold above 23,695 and also above 23,829, preferably. Yes, bias overall will be to the upside, down the line as long as we're above 23,210, but very clearly we're having a pullback. You see this naked candle right here. There would be no problem to just kind of dip some wicks down here and kind of fill up this inefficiency in this naked candle. Usually that can go 50% or so, right? 30, 50%, and then pop back up and just kind of surprise you. But again, like if it loses this middle area right here, then we could have a little bit of a squeeze to the downside, and it may just want to retest the lows of this kind of conical shape right here, this broadening wedge. This does have a measured move to the downside. It's very similar to a rising wedge that can break down. So this could actually have just conservatively, it could have a measured move of just retesting its lows before firing off later on. Okay. So just to be aware that this type of structure does tend to do that. Even if it's bullish, it tends to come back down, strike hard, freak everyone out, and then pop back up. And if it can't find its support down there, then of course that could break us down, and then we would be at risk of this kind of head and shoulders perhaps pattern taking us all the way down to, yeah, I mean, it could take us pretty far down, to be honest, should we put a head and shoulders there. But if this is just distributive, and maybe if we want to test some other liquidity, then we could not close this head and shoulders, and we could just basically have the neckline bounce up here, not break below the neckline, and then basically that would be around 21,500. I wouldn't necessarily say that we would fall further than that unless we do some additional analysis at that point. But guys, let's move on to the daily, because on the daily we have a little bit more of a precarious situation. Yes, we're retracing off of some type of a bullish setup on the 6 hour, but for the daily, you can see that we do have we're very low. We're very low on our momentum pool here. We're at risk of losing our current momentum. Okay, so all of this that pushed us to the upside on the daily here, well, that was nice yesterday, right? That was a huge move yesterday of approximately 7% to the upside, which is massive on Bitcoin. But today, we're just barely hanging on by the skin of our teeth here at our current momentum. And you can see that we are under 23,768, which is our volatility pivot. As long as we're underneath that, I'm going to be biased to the downside. And so if we close at this level or below this level in, what is it, 10 hours, then I would think that this is probably going to retrace back to its lows, okay, back to this kind of structural low. And but the good news is that the Bulls don't lose control until 22,801. So while previously we were talking about those 6-hour trades, now we're talking about the daily, and there's much more flexibility the higher the time frame that you go, right? And of course, the level that we want to break in order to kind of try to zoom up and capture this next support and resistance zone is essentially we want to break above 24,514. If we do that, then we're going to add momentum to our current momentum that we're holding. And we're additionally going to flip the MACD bullish. I was showing you it's red. It's red on the chart right now on the MACD, and so that's going to make a lot of people bearish. It's going to make a lot of people skeptical. A lot of people a little bit nervous about this move, unless that MACD turns bullish again. So again, like that's the 24,013 that we really need to conquer for that one. But again, as long as we're holding our current momentum, which is 23,737, and we're just a hair above that, 23,764, as long as we're above that level, I have nothing bad to say about this chart. Okay, like we're literally holding the level that we need to hold to have the potential to pump, and so I'm not going to be in shorting mode or anything underneath that either. And why would I even short, while we're still in a bullish control zone on the daily? So for you daily traders, um, don't really see any even neutral, kind of setups for shorting unless we're below 22.8. We are just basically in pullback territory in this area. And again, above 24,500 is where we want to be for that bullish continuation, right? Those potential pumps. Let's take a look at the 3-day, because the 3-day will also be closing today in 10 hours. And so for the 3-day, everything looks really good, right? I like to provide that context because trading on the higher time frames is much easier than trading on those lower time frames where people just freak out every 5 minutes, every 15 minutes. And we really have to, sorry about that, just taking a sip of coffee. It is 6 a.m. over here. So, guys, like if you just want to chill out and just want to understand what's going on, as long as we're above 23,000, our volatility is great on these on these 3-day trades. As long as we're above 22,836, everything is great on the 3-day. And we don't really endanger our MACD on the 3-day until we're at 21,500-ish. We don't lose any significant momentum. So we could have a sharp pullback, just like what I was saying, right? These kind of structures, they sometimes freak you out and then they go. We could have a sharp pullback even as low as 21,250, although I'd prefer to stay above 21,500, and we'd still be in pretty good shape, just maybe a little wick down there, right? And you can see we'd be above our 9 EMA. And currently we're well above our 4 EMA and also being supported by this 89 EMA on the 3-day. So, if you're trading on the 3-day, which is a popular time frame in crypto, a lot of the charts, a lot of the altcoin charts, guys, are traded on the 3-day, and you're just going to have a much nicer life if you're trading on the 3-day versus trading even on the daily and especially the 15-minute or the 5-minute. You guys freak yourselves out for some reason. We've been trading on essentially the weekly and the monthly and the quarterly and these kind of multiple day intervals here at Alpha Commission, and we've just been absolutely killing it since the Pico bottom. And yes, I do use occasionally the 15-minute in order to snipe these wicks down here, and I try to find microstructures in order to see, are we building up support or are we not building up support. But short of the bottom of the market, I just really don't worry about that sort of thing. Because if you zoom out, you can see on the 3-day, oh, hey, we had a double bottom. That's very bullish. Oh, hey, we broke the neckline of this double bottom. Maybe I should be in the market, right? And then it was just up only after that. Okay, like you don't have to stress yourselves out, guys. I mean, look at this beautiful EMA squeeze here on the 3-day, right? Between the 9 and the 21. Maybe you would have wanted to enter right there, right? Off of that double bottom, off of that squeeze, like the Alpha Fam, right? We caught this move. Why? Because we're trading on the higher time frames, trading on the 5-minute, trading on the 15-minute, trading on the hourly, trading on the 4-hour. All that's great if you want to just like leverage trade and snipe and all that stuff, but you're going to miss the forest for the trees, and the forest has been magnificent. Okay, we could capture this entire move because we were trading on the 3-day as opposed to trading on the 15-minute, guys. Basically, on this chart here, you can see that the bulls are in control above 20,000. Not much to add to the 3-day, guys. It just looks really nice. Okay, so that's my bit of alpha for you guys today. Not sure if we should just go over this, but yeah, let's go over the monthly just as the last kind of thing, okay? Because the month did close. I did mention that we do have monthly bullish divergence here. Okay, that's what this pump is basically coming off of. We do have a bullish drive of divergence on the monthly. I caught that before almost any channel that I know of caught it, and I did not copy that from anyone. I did drive that myself. So I am proud of what we're doing over here at Alpha Commission. We are absolutely killing it. We are recognizing these moves. We are looking at the higher time frames. We are finding the bigger picture before the other guys are. And I know my system's a little bit complicated, but those of you who take the time to understand it, you guys are absolutely killing it. And of course, you can join us in the Discord. The link's in the description of the video below. It's a free discussion group, and we can just try to look at some charts that maybe you want to look at, and you could even suggest a request that I do a chart for you, and then we can look at some more recommendations as well that I can't really do on the YouTube because I don't want to wreck anyone, right? I don't want to be like some type of a shill for a coin or something. But in the group, we can talk about it, and it's more friendly, more it's kind of like face to face almost, right? Guys, we are holding on to our current monthly momentum as long as we're above 23,130. Currently, we're at 23,770-ish, and so we're doing what we need to do. The monthly MACD is going to be turned up as long as we're above 22,939. So that $23,000 area is very critical for the monthly. You do see that we do have a naked candle down here. We do have some inefficiency gaps, which could just end up freaking us out with a wick, and then maybe we continue to pump because our volatility pivot is all the way down here at 16,770. And so again, like the market makers, the institutions, all of these guys, they have a lot of flexibility to just freak people out and then still be bullish, still have bias to the upside because they'll be above the volatility pivot. Now, some of these levels would take a lot of work to repair if they broke them. Like 20,000 wasn't an easy level to defeat, right? And you break down some of these levels, it's just gonna look really bad. It could take months, right? It could take a half a year to repair should we come down to these areas. And so, if you're bullish and you want to get in on the bullish, sentiment and the bullish drive up, you don't necessarily want those deep pullbacks because it's just going to get us stuck sideways and maybe even further down should some bad news happen, right? You do want us to just have a very shallow pullback and then to just keep going. Okay, that's the ideal situation. And since we are above the 9 EMA on the monthly, things could get quite exciting because the 21 is up here at 27,000. We have the 35 up here at 26,000. And so should we be able to hold this level in the month of February, I mean, we could be talking about those levels even up here at 28 as potentially another drive. This will be a huge drive of bullish, price action to the upside. So, I do think that at some point we're going to have a major downturn. Perhaps this, 21 EMA rejects to the 9, and then we kind of just chop around, and then we can go. But yeah, I mean, this has just been an amazing run right here, and it definitely has been a bull run. Uh, we're above the 9 on the monthly. I mean, what do you want me to say? Like, this is almost a bull market if we continue this way. If we close the month above the 9, how can I say this isn't a bull run, right? I mean, this is a bull run, guys. So unless we just get smacked down, then I don't know what to say. Though the one thing that I think we can be conservative about, and I don't believe that a bull market has to take out its previous all-time high, but I can say that we don't enter the bullish control zone on the RSI unless we're above 50,000, okay? So we could come all the way up to 50,000 and we'd still just be in neutral territory on the RSI and a lot of these indicators on the macro, okay? And that could take us all the way back down. Okay, it's happened before, and then we could potentially just take more time to have another run and then make our higher low and go on the macro there. So guys, I hope this episode gave you a lot of good context for what's potentially going on. I hope it helped you understand a little bit more of my trading style. I hope it helped you understand why I look at these higher time frames and how much easier it is to think about trading on these time frames than it is on like the 5 minute where you're just having a heart attack every 5 seconds. But yeah, guys, good news yesterday. Of course, we can have pullbacks after a bullish pump, and so be on guard. Obviously, we have that kind of structure going on the daily here that we do need to defeat if we're going to get out of that. And just to throw this out there, because this has been a longer episode, if you are trading on the 6 hour, then these are your key levels to look at, key price levels to watch. If you're trading on the daily, these are the key levels that you want to keep in mind. If you're trading on the 3 day, one of my favorites here, then you're pretty chill, guys. Like, you're just doing great. And if you're trading on the monthly, which is really just our context, then here are your key levels, guys. Okay, and again, like, we could go all the way up to 50,000, and it's not like we're not going to be in the bullish control zone. We're not going to be on a new bull run. It's just, I mean, a new bull market to Valhalla or whatever. We're going to be in danger of a macro pullback, okay, unless we overcome 50,000. And but hey, anything in between there is still fair game. Okay, anything in between there is still fair game, and we just want to play it level by level by level by level by level, and be as conservative as possible. And every time we cross one of these major lines, just take a little bit of profit, take a little bit of profit, take a little bit of profit, put food on our table. At the end of the day, we don't want to hold on to just a whole bunch of coins in our bag when this thing tips over finally, whenever it happens. We have no idea when it'll happen. Someday it'll tip over. We don't want to just have a whole bunch of crypto coins in our pocket. We want to have cash in our pocket. So don't forget to pay yourself at least a minimum wage for the work that you do. And the rest, you can just let it ride as long as we're bullish, right? But that's your alpha for the day. Stay safe and happy trading.